guys, weekly market outlook today, and that's on Saturday for next week. An important one. Why? We have a ton of news releases expected from the US in particular. We have recession worries in the US and maybe pushing themselves over to global markets, and we have crypto markets which have moved further to the downside alongside basically a falling NASDAQ. With that, welcome to our weekly market outlook here at FXstrategies.Asia. As usual, leave your comments under the video and don't forget to subscribe to our channel not to miss any further updates here. Next week is gonna be an important one. Why? We see that soft economic data from the US have weakened somehow, but let's see. Also this week we had PCE data. PCE data on Friday. Core PCE came in 0.4%, slightly higher. This might inhibit the Fed to basically kind of not cut interest rates. 2 rate cuts this year, obviously, are expected. However, maybe only one is going to happen in the end. But some rumors alongside market observers could state maybe we see emergency rate cuts as the negative economic impact is guiding market sentiment and hence obviously kind of causing the market motivation to be rather negative. What else is going and coming this week? RBA this upcoming week. Royal Bank of Australia rate statement. With that one and the interest rates decision, 4.1%. We don't see any rate cut expected. What we see is though a Australian dollar which had lost some momentum, and that's clearly the case here, and maybe basically also even ongoing. So this level looks like it's going to be set in stone, basically retracement of the resistance areas happening and the downside motivation here in this market potentially going to continue. We see the recent resistance area as well here. If you're looking at this charting pattern here, we see some rising trend in a way, but the market has not been able to follow through. So whether this was a rising trend or whether this is going to be just a retracement higher, which is what I think here, the market might basically start to weaken further. If the support line here is broken, downside momentum might occur, and that's basically also in line with what we see when looking at the monthly chart. The monthly chart tells us that further negative sentiment might be the case, and that negative sentiment here is going to potentially happen should the market not push higher, but instead should the market basically kind of face the recession worries, in particular from the US. Those might be the ones which basically kind of cause the market motivation, which might kind of cause the sentiment in the Aussie to kind of weaken. Why? The Australian dollar is a risk-on currency. It tends to perform better when the economy in general and the market sentiment remains positive. Now, since the market momentum is fading off technical support zone here, current support zone, it didn't seemingly take the market long to basically start falling as the market sentiment here off this resistance area seemingly just giving way, causing the negative momentum here to continue. Anyways, that's a preview, but what we shall see daily, weekly charts, let's say with the daily, any kind of failed attempt of this 63.10 resistance area here might act accordingly, causing the market to weaken further. Downside momentum being the case here, and downside momentum basically potentially causing negative momentum in the Aussie to unleash further momentum. Should we start with crypto? Yeah, of course, you guys like that. Bitcoin has been basically starting to depreciate again. And off this support zone here, we currently face the sentiment with negativity ahead. That's Bitcoin starting to depreciate. Yeah, it should and it will likely gonna follow with that negative sentiment as well. We have the same with Ethereum, about to break the recent strongish support area, maybe going to fall as well further. We have XRP, which does or did the same. also kind of really breaking the lows potentially. And now we are back with what I've expected in the past several times here. The all-time high, is it an all-time high? Well, I'm not too sure actually. Yes, the all-time high standing rock solid steady, but the market initially needs to go down further to the downside here. And it depends. Will we see really a bigger recession? Then crypto is likely going to follow up with NASDAQ, S&P, say mostly the tech index in the US, and stay with the NASDAQ. And hence, obviously, the downside motivation here in this market seems to be the case. Next stop, 58. Subsequent stops, we have a ton, and hence, obviously, kind of the market motivation looks set to basically weaken again somehow further. That's my worry, or my chance here, at least in XRP. You can trade those markets obviously to the short side of things as well, and that might be one of the reasons why we like to see the current development here. And Solana, well, no need to be really big time mention that, kind of also starting to depreciate further. What's happened next running? We have further information after the RBA rate statement and the interest rate decision out of Australia. ADP employment change, something important from the US. Let's not really talk about this one too much. Is expected to rise somehow. The economic sentiment, the economic data in the US in general had been so negative, and that's the soft data. Current soft data from the US, PMI data. We have further PMI data, basically ISM PMI this week, this upcoming week as well. And they might just tell us the half of the part, right? So soft data weakening, and hard data, the real information, non-farm payrolls, basically GDP figures, all those, and some of them obviously as lagging indicators, might tell us a differently negative picture as well. If we're looking at the S&P 500, we can say and see the same story. The market initially in the recent couple of trading days, say basically in the last say 2-3 weeks, starting to appreciate, right? So the market went slightly higher and looked like it would go to higher levels. And I said this line in the sand here, oh, nice trend line. This would have been my trend line of potential fading market sentiment. But what we see is that the market towards the end of the week, last week or this current week, but the end of last or this current month of March might actually, we still have one trading day on Monday, might indeed start to depreciate further. And what I would expect now is that the market first of all weakens further, as I played it out or turned it out many times over, but we could see that the market will appreciate slightly further. So maybe we see that the first day, basically the first days in the week, in the next week, will start causing upside momentum until the recent resistance area comes back into focus. Resistance on the left, now turning into resistance on the right. So that's exactly as it was holding as a support, but was not holding long as a support, might just cause the market, hope you can follow me still, to weaken further. So the next couple of trading days, next week, Tuesday, Wednesday, Thursday, maybe just a bit of a gradual slight increase here. Would there not be the game changer, the negative game changer with Donald Trump? He's going to offer further information in regards to tariffs, and those might act negative because the increase in tariffs is also what causes the entire economy to basically start to be negative. So current corporate, the corporate sector is just negatively talking in regards to US policies. Several banks also see, US banks, that the market's negative sentiment leading towards a recession, and that in general might basically just lead towards quite some downshift in markets, and that downshift in markets is exactly how we expect this to potentially happen, causing a negative momentum moving forward. So we have crypto down, we have the Aussie lower, we have basically NASDAQ, S&P to the downside. And now we should look into the next news event, which is up next week on Friday, with the non-farm payrolls. So current adjustment in US policies might not be reflected yet. This is the numbers from basically February, so a bit lagging here. But what if next month the data will be negative? And what if, and that's exactly here what I said, ISM services PMI expected at 53, lower, right? So we see that the data coming in, or the next week's data, are basically kind of showing a negative picture. We see that unemployment claims are expected slightly higher, not much of a story here, but maybe they also kind of paint a bit of a grim picture, stating that the US economy is basically in negative shape, causing negative sentiment to continue. So that's at least how we expect this to happen, and that's how we we see the market sentiment potentially in the next a couple of trading days. Back to the charts, what we see is the dollar against the Japanese yen. Let's drive this and open this with a naked charting pattern, because I want to mark out a couple of interesting zones. The long-term strong resistance area. We have a long-term support area. Is that going to tell us that the market is going to fall? We don't know, but we need the break of this 50 moving average first, and this 50 moving average might just basically start to not be broken, because we have this pin bar candlestick from this week, and this tells me that there might be some negative sentiment ahead. Now, this is not in itself a reason for weakness, but the dollar against the Japanese yen candlestick here shows us that there might be negative setbacks, plus in general what we see is that the dollar against the Japanese yen currency pair on the non-farm payrolls news releases usually tends to be quite volatile, giving us the chances to expect further downside momentum maybe in the near future. Strong trend lines, as I expected, kind of can be marked in. Resistance area is marked in as well. Any break of that zone, the one I mark in here right now, 149.20 is the one we shall focus. And guys, by the way, for you subscribers on my platform fxstrategies.asia, obviously you don't miss any updates, because we are chatting day in, day out in a WhatsApp chat and finding out what are the most important, the most useful, and the most trending trading strategies. So stay tuned and focus, and just basically follow us on our website. Send me some details if you have a question in regards to membership plans. I'm happily replying to you as well. Back to the dollar against the Japanese yen. It looks kind of quite weak. Looking at it from this naked trading pair, there's nothing much to say about it. The trend looks slightly higher. However, the trend in regards to the, and this makes not much sense here, the trends in regards to the dollar against the Japanese yen might actually basically gear up some momentum. We see also the euro against the Japanese yen. I know the euro has been much stronger, but the euro Jappy also depreciating off this recent area, 161. If that zone is broken, the market might indeed weaken further. The Japanese yen might start to appreciate as well further, should it get, and that has changed, I know as well over the recent, say, few years already, should it change to get back its safe haven status. But what we see else in markets is that the gold price has not been stopping in recent figures. We talked about it fairly recently when the 2000 level, 2000 US dollar level was basically broken. That's like nearly a year ago. And now we see that the 3000 level has broken and given way as well. So that zone is kind of quite an important one, but it seems that this market is unstoppable and moving itself to the upside. So with that, obviously here, the gold price seems to be kind of quite importantly moving higher, and seems to be also quite of some guidance for us. Well, we might be at one of a leading, or basically now leading a resistance, which is now not causing the market to move substantially to the upside, because the market had moved already dramatically to higher levels. Let's focus on this part. That's exactly the one I mean here. The market has been rising and subsequently started to weaken. Maybe we see the same. The market has been rising, and maybe we see the market basically starting to depreciate. I wouldn't enter if I were now to trade this market here. However, my stock portfolio, and I have quite a few stocks, in particular dividend stocks, Wheaton, a trading company in regards to gold, had been performing quite nicely, so maybe pay some attention as well. Rio Tinto, BHP Billiton, some of them have not been overly bad. In particular, they obviously share quite some nice interest in terms of payouts with dividends. Guys, that's all in a nutshell. We expect here downside momentum to continue. The NASDAQ lower, the S&P lower. I didn't talk about the German DAX, but the DAX also printed a nice bearish turnaround candlestick pattern on the monthly. We still have Monday's trading this upcoming week to maybe give us some other insights, but I expect markets to be negative in the next couple of weeks, if not even month, moving ahead. We have the clouds picking up some momentum over us. Dark clouds are forming, and that might be something which could kind of be something important in regards to negative market motivation. Plus, crypto under fire. The general market sentiment obviously kind of not looking overly positive. Guys, stay tuned. Let me know what you think. Please leave your comments under the video, and don't forget to follow up with us here. Stay tuned until next week and midweek. Another update here, a special update here. See you then. Take care, everyone. Ciao.